Hello and welcome to this week's show, the latest episode of the Intelligent Wealth podcast with my eminent guests, Awet Ghirmay and Carl Roberts. And it's me, yours truly, Tony Byrne, hosting today. So what is our podcast all about? Well, it's really for you serious investors out there, people who take investing seriously. They want to get excellent returns and they want to learn new stuff. We're constantly reading and studying the markets. We follow the greatest investors and fund managers in the world regularly. So we hope to be able to give you some useful insights that you can learn from and take something away of value from this show. Just a little bit of news. We're going to be inviting guest interviewees, top interviewees, once a month to the show. We've already got 3 great ones lined up, so just watch this space. In terms of the podcast, clearly I've got to mention that prices can rise or fall. You may not get back the full amount invested. The usual risk warnings apply. You can't really take it as advice. This is just our own opinions on all these subjects to do with investing in shares, mainly great businesses. So I've just mentioned the two other guests here. Awet is our head of research at a fund management company, Minerva Money Management, and Carl is fellow director. I'm the managing director. Carl's probably what you might call the technical director.
Yeah.
Right, we're on to FinTech now. So what do we mean by FinTech? Well, of course, it's financial technology or technology in financial services space. That's what we're talking about. And what kind of sectors? Well, it can be various aspects of FinTech. It could be banks. It could be, I don't know, product providers. It could be apps, financial apps and so on. There's quite a big range. Mm-hmm. It's one of the 7 themes of our fund, the YFS Intelligent Wealth Fund, FinTech. We think it's got tremendous prospects. And interestingly, it's one of the areas, one of the sectors in the world in which Britain is one of the leading players. I think we're number 2 in the world for FinTech. So that's testament to British technological engineering and those kind of skills that we have as a country and have excelled in, of course, since the start of the Industrial Revolution. So I think what's interesting is that it's different now. It's not manufacturing, but I still think we're pretty good in what you were referring to earlier, Carl, in the picks and shovels sort of market, with fantastic technology companies, FinTech companies behind the scenes that aren't well known to the public, but they're still great companies that will thrive. And we've got quite a few of them in our fund. Anyway, I keep looking at my show notes and keep finding reference to crypto, Carl. So back to you again.
You can't have a show about FinTech without mentioning crypto, can you?
Of course. That's one of the things I should have mentioned. That is FinTech. Crypto, of course.
Yeah.
Anything more to add about crypto?
So FinTech, obviously they say money makes the world go round, don't they? So anything involved in this kind of space is really interesting to us as investors, particularly looking at areas of growth, future growth. And of course, cryptocurrency is one of them. So being an investor and a financial advisor, I've been following Bitcoin for some time, and clients have obviously been asking about it. And I've always been quite skeptical of it. And I think you guys know that. I've always been quite bearish on Bitcoin as an investment,
right?
Because the technology behind it is quite complex. It is difficult to understand, and there's a famous saying, isn't there, that if you don't understand something, you probably shouldn't invest in it.
Yeah,
right.
And it seems very volatile to me. So although I wouldn't personally invest in Bitcoin, the Bitcoin price as a currency, in the same way I don't invest in US dollars or Japanese yen. I think that's for traders, that's for speculators, and that's just not something we as fund managers or myself I'm interested in. But I do feel now that a version of cryptocurrency, it might be Bitcoin, it might be one of the many others, could be genuinely the future of money. And I do feel we need it, because the whole concept of money and the problems with our current system is really well explained in the book by Dominic Frisby, Bitcoin. I think it's called Bitcoin, the Future of Money. So if you ever want to try and understand Bitcoin and how it's kind of come about and why we need it, I really recommend that book, Bitcoin by Dominic Frisby. He really explains things really well, particularly focusing on the. Oh, and there's another book, the Life After the State, is it, or Life?
Yes, After
Life
the State.
Yeah.
So that kind of goes through the history of money and all the problems that's happened with it. And then the following book, Bitcoin, kind of shows you how Bitcoin and other cryptocurrencies could kind of change money in the future. But yeah, and the problems of our current monetary system, the fact it's only really built on trust. Our fiat monetary system is only really built on trust, and it's controlled by governments, isn't it? And Awet alluded to it earlier. Money has been debased for years. It's been devalued through money printing. I mean, even banks now, they don't even need to print actual physical money, do they? They just add further digits onto the spreadsheets in their systems. And the books will talk about even wars, for example, that it's very unlikely you'll have wars if governments couldn't control their own money, because they'd run out of money, so they wouldn't be able to then fund their wars. Whereas cryptocurrency is going to come along and potentially stop all of this, because it's not centrally controlled, it's open sourced, and there's a finite amount of it, particularly when it comes to Bitcoin. I think there's other coins out there that do allow kind of a more ongoing unlimited mining, but with Bitcoin especially, there's a finite amount of it. So at some point in the future, you won't be able to create any more Bitcoins, and that'll be it. Really interesting times in that cryptocurrency space. It obviously allows true borderless exchange. I can see a lot of benefits from it.
Yeah, I mean, cryptocurrency. 96% of the Bitcoin is already being mined, and there's only 6%. And consider the halving; it will take years to mine the remaining. But what's interesting about Bitcoin is, I think we are, privileged because we live in the West, and we don't appreciate the value of Bitcoin. But if you live in Argentina, for example, Zimbabwe, I wrote a blog about it as well, you would really understand why Bitcoin is important, because they had hyperinflation and inflate. For example, in Argentina, inflation on average is being around more close to 180, 100, and historically. So if you have that sort of inflation historically, you would appreciate the value of Bitcoin, and you will understand. Historically, the devastating impact on the fiat money they had on those currencies. So it's important, I think, to if you live around some other countries, you would appreciate it more, I believe, than living in the West.
It's a good point, Awet. And also, there's still large sections of global society that don't have a bank account. They don't have a means of trading. I've read a stat somewhere that I think there's more people in the world now that have mobile phones than bank accounts. But what crypto allows is these people, because they've got a mobile phone, they can now start doing monetary exchange with other people and setting up businesses, particularly in sort of the African countries, the poorer Africa countries. So you bring in a whole section of humanity into the kind of trading system, which is really interesting.
It is. I think. I'm from Eritrea originally, and in Eritrea, most people don't have bank account. And I think recently, Nigeria, for example, they tried to ban this crypto because they realized the impact they were having on their monetary system. I think they tried to ban and try to do a few things to destabilize it. But you see that because the impact is powerful over time when people have alternative currency that is actually not rely on the digital central banks printing press. So I think it was is it Henry Ford once said, if people understand how the monetary system works, actually there will be a revolution. I think, as you mentioned, Carl, the system is based on trust. And even if you read the Satoshi Nakamoto white paper, his argument was the system is based on trust. You need trust to keep it going. And historically, the trust has been violated so many times. And I think that's the issue where this crypto and new digital currency is trying to solve. And we will see how, because if you look at Bitcoin, it's been around for the last 15 years historically, but gold has been around for thousands of years. So in comparison, there's a big difference between them. Gold has proven to be storehold of wealth, where Bitcoin has to prove a lot, and the future will tell and will judge Bitcoin.
Touching on what Carl was saying about the fiat money system, which is the system we all are familiar with, which is notes and coins, and also the digital equivalent of notes and coins. Of course, we talk about cryptocurrency being volatile and unpredictable, and we don't know about the future of it because it's quite new. But really, the fiat money system is very fragile as well, extremely fragile. And some commentators would go as far as to call it a con. You know, the fact that governments control banks and banks literally just create money. Yeah, the fractional reserve banking system is terrible. You know, where the bank literally just creates money. So you go to borrow for a mortgage, let's say 90%. The bank only has to find, or you have to find 10%, and the bank just creates the 90% out of thin air. I mean, that's just, and charge you interest on the whole amount. That to me is just not real, is it? And ever since we were divorced from the gold standard in 1971, and just keep printing endless amounts of money, particularly in the US, and endless borrowing. I mean, the whole thing's going to end in tears in my book, but I don't know when. I think it could be some years away, but America, I think, are showing lots of signs there of something that could get out of control. We already had the great financial crisis in 2008, didn't we? But I do think it's a very weak system. I mean, how many dollars has America printed in the last 2 or 3 years? It's a huge percentage of the amount they've ever printed in their entire
25% is being
history.
printed in the
yeah. And if you look at the amount of debt now, it's just getting beyond belief, really. And I don't believe you can keep printing money and can keep borrowing money forever. It eventually ruins your economy. And we've seen, even to a great empire like the US, it can happen. We just don't know when. Anyway.
I mean, if you think about it historically, the main countries, how they went bankrupt historically is debt. Even companies, debt is actually the most the worst thing you can have, and it can destroy economies and companies.
And all great empires do end one day. We've seen it throughout history: Roman Empire, Greek Empire, Dutch, British, US. There's been no end of empires, particularly European countries. So they do always eventually end. So it's just a matter of time, really. Anyway, Awet, I think you wanted to talk about a few companies in particular, didn't you? There's a few I've got on the list, starting with Wise. What can you tell us about those?
Yeah, I mean, because the topic is fintech, I mean, we are invested in some of these companies. For example, Wise. Wise is a UK fintech company. They are trying to disrupt the currency exchange, which is a few trillion market. Historically, the foreign exchange market has been under served because of banks being charging and those few hidden charges behind it. But companies like Wise, they have, I mean, the company was founded by Estonian immigrant, was working in the UK, and he had a problem sending money to his country. And he saw the fee. After the fee, he realized there was an opportunity, because it's always the best time to start a business is when you find a problem that you can solve. And he realized he can solve that problem by creating a company. That's when Wise was born. So Wise has been solving the problem historically. Now it's actually, you can settle most of the money abroad for within like a few hours. And they build an infrastructure that will disrupt the banking system. Even though there are a few competitors are coming into the space, like Revolt and HSBC now are actually gaining, trying to understand, try to capture market share. But Wise, what they're doing differently is they're being quite transparent and honest and very open about what they're doing. And people like that when you're honest and you're showing them that you are adding value and you can explain how you're doing it without, no hidden fee and so on. So Wise is doing a great work here, and there's companies like in the crypto space as well. Coinbase is founded by Brian Armstrong. They are pretty much ahead in terms of regulation in the crypto space. So if you believe that crypto is going to win, Coinbase is the beneficiary, because exchange have actually more advantage. They have more data, they have more advantage that they can understand. For example, they can understand about the future of this new crypto. And the good things about Coinbase as well, they have venture arms on coin, so they do make small bets on the future of these cryptocurrencies and blockchain technologies. And it's founded, this is still the founder still run the business, and he's still the CEO and has significant skin in the game in the business. So there is a great potential for these businesses to go in the long term. And you have this Robinhood as well. You probably heard of the GameStop. Everyone was trading when the pandemic hit. So apps like Robinhood, they making trading free, pretty much free, but they do make money by charging fee from the flow. So there are great businesses that are dominating the crypto space. Even like companies like Apple, they realize it's a huge market, and they are tapping into the market. Apple, for example, Apple Pay, and Google as well, they are tapping into the market to capture a big market share. So it's becoming competitive, but competition is a great thing, because it creates a lot of innovation is coming out of this competition, and even the transaction is becoming cheaper to trade, or to do so many things. So it's a great thing to have.
Can I give you a personal story? I personally, unlike Carl, I personally have invested in Bitcoin
Right.
quite a lot over the last few years, but I tend to dip in and out of the market. I tend to time it. I tend to invest after it's had a big fall.
Mhm.
Because there is a pattern that's emerged with Bitcoin, whereby when there's this halving every 4 years, it's called, where
Mhm.
basically they reduce the incentives to the miners to create Bitcoin. And every time there's a halving, there's been a pattern the last 12 years, I think it is.
Mhm.
Every time after a halving, the value of Bitcoin's doubled. Now, that doesn't mean it's guaranteed to happen again, but there's been a halving very recently.
Yeah.
So this isn't a prediction, because if it was that easy, we'd all be doing it, wouldn't we? And things do change. And also Bitcoin this time is it's not far off its all-time high. So it's not like it's crashed, because what tends to happen, it rises huge amounts and then it has a crash of like typically 80%, and then it will rise hugely again. I wrote a blog about this recently. I was talking about the returns on different asset classes, and
Mhm.
I thought it'd be interesting to look at the returns on Bitcoin. And I knew it had been really good, because the first transaction in Bitcoin was 0.0009
Mhm.
of 1 cent
Yeah.
in 15 years ago, in 2009. It's now $67,000. So the annual compound return has been 235%. So whilst none of us know what the future is, and mistakes can happen, I did do very well after the last time it reduced and then rose a lot. Then I got out of the market for a couple of years. I dipped my toe back in the market and went and invested in a company called FTX. Now, those of you who are informed will know what happened to that company. This was Sam Bankman-Fried, who's now in prison. He committed a crime, misleading investors.
Mhm.
It was a fraud, basically. And my small amount, fortunately, it was only £1,300. As I said, I only dipped my toe in the water, was lost. And I just ignored all the emails from the liquidators, the administrators, thinking you never get your money back in these situations. It just never happens. But interestingly, the administrators have found that there is enough money to repay the investors. So when I found that out, I thought I better find my old emails, and I've now put my claim in for my princely sum of £1,300. But if nothing else, it's a salutary lesson to the listeners here that it is high risk, like Carl says. It is very volatile. Choose your providers very carefully. And although I'm not recommending Coinbase because we can't, it is a fantastic company, and that's the company's platform that I personally use. But it's up to you. If you want to dip your toe in the water, I would suggest only commit money you can afford to lose, and don't make it a very significant part of your total wealth. Maybe no more than 5% of your investable assets, if that's what you choose to do. But I wouldn't dismiss it. The truth is, none of us really know the future, do we? None of us can predict. But in terms of investment returns, it's been absolutely phenomenal for some years. So a small slice of your investments might be worth considering, but you've got to, it's not for widows and orphans, basically. You've got to have a higher risk appetite for investment risk, not for everybody. So we move on to the last section of the show, which is our recommendations. It can be anything, like it can be a book, it can be a podcast, it can be a film, whatever floats your boat, really. Mm-hmm. So come on, Awet, what have you got to tell us?
Right. I have a book. I read a book called Miracle Morning. That was a few years ago, and it changed my life in a way that having a morning routine is very important. Miracle Morning was basically, the idea was approximately 60,000 thoughts go through our brain daily, and 75% are negative and 95 are repetitive. So when you have 60,000 thoughts going in your brain every morning, so the book, it just shows how important it is to have a good, great morning routine, so you can be more productive. And you can have, you can realize your potential in the long term. So it's very, life-changing book to read. Anyone who has, struggled to wake up early, not understanding the value of getting up early and being more productive. If you work for example, from 9 to 5, you can still get up at 5 and do so many things between the 3 hours. So it is a book that someone who wants to achieve more in life and push themselves, if they want to exercise, they can wake up still and do the things that they want to do, and instead of complaining. So it's a very inspiring book, and the author as well go through his personal experience of how he transformed his life getting up early and so on.
So just to repeat, that's Miracle Morning by Hal Elrod.
Yeah.
Now, one of our fellow colleagues happens to be my wife, Cholpon. Now, I'm a very early riser. I just can't sleep long. So I, like you, I have a morning routine. I'm sure Carl does as well. But it's a struggle for me to get my set time is 20 to 6, only because psychologically I don't want to get up at 5:30, because it sounds like it's nearer to 5 than 6. It just sounds better getting up at 20 to 6. So I have a massive routine in the morning, lots of things I do, exercise, reading, and so on. But I'll leave it to you, Awet, to tell my wife she's got to get up at 6 in the morning in future.
I have the book here. I probably give the book to her.
Keep your distance. Keep your distance. You might
actually
get
gave it to my wife. And she read it recently, and she loved it. Yeah.
Well, my wife might just hit me with the book itself if I dare suggest it. She hates getting out of bed in the morning. Anyway, Carl, what about you? What great website or podcast have you got to tell us about?
Well, just on Awet's, I think it's a really good recommendation, Awet. And I think the point as well is to be really intentional about your day. I think so many of us, we just wake up and then you're not in control of your day, are you? The day's controlling you. You might flick on your emails, you start getting sucked into replying to emails or scrolling through social media. I think the point is, I've been using the Full Focus Planner for many years now. Michael Hyatt and company provide it. They've got a really good podcast on kind of leadership and business and things. But it's all about taking control of your day, actually planning your day the night before, having routines, like you say, and you just get so much done. You can work less, but get more done because you're just so much more intentional.
That's
and
good,
your time blocking. So really good recommendation.
Full Focus Planner. Is that called?
The Full Focus Planner. So it's actually a physical, and I quite like it. The fact it's a physical, almost like a diary, where you kind of have to review and write notes, and because it's all about every day, what's your top 3 things you've got to get done, and focusing on them. And then you have your top 3 things you need to do for the whole week, and then your top 3 things you need to do for the whole month, and just that focus. all the time. So yeah,
what I find works for productivity, Carl, is just you give everyone else all the work to do. Just top 3 rules is delegate, delegate, delegate.
yeah, there is
That seems to work well.
Yeah,
but it depends if you've got anyone to delegate to, of course.
True. But in terms of my main recommendation this week, linked in with our sort of chat about fintech. It's a website I've been using quite a lot more recently, and it's finchat.io.
Yes.
I don't know if any of you have used it, but it's basically like a stock research platform.
Yes.
But what's quite different about it is it's really using AI to make the research much quicker. So it's the first time I've really seen this. So it's got all the normal tools in terms of looking at companies' financials, tracking share prices, all the graphs and things. But where it really comes into its own is it's got like a chat feature. So if you're looking at a particular company and you've got a question mark about it, or you want to understand something about the figures, you can ask the question in the chat box, and it'll really hone in on that point and bring up lots of different kind of research and articles as to why that company is acting in a certain way, or why it's not made profit that particular year. So I find it saving a lot of time rather than me having to sift through accounts and reading the company statements and things like that. So yeah, it's finchat.io.
Really good recommendation.
Really worth checking out.
Really good idea. Yeah. Of course, now I'm going to talk about my recommendations, things I've been following lately. But of course, you totally stole my thunder, Carl, even though you created the show notes, because you talked about the 2 books I was going to talk about. Dominic Frisby's After the State. Actually, you didn't mention the other one. After the State, you mentioned the Bitcoin book, but I also read Daylight Robbery, which I quite liked because it's about taxation and how governments literally commit daylight robbery. I mean, 100 years ago, the typical amount of tax an individual would pay would be about 12% of their income. It's now risen to 60%. And it's all being spent on, because the government's taking control of things they're not very good at. In fact, I don't think the government's good at anything, to be honest. But they've taken control of healthcare, education, welfare, but they don't make a very good job of it. The NHS is a great example. Now, some listeners might not like what I'm saying, but I'm basing it on actual experience of it and people I know that work in the NHS, what they tell me and what I read about it. I just think governments should just lay off and just tax us less and govern us less and just let us get on with it. Because what's interesting about this book by Dominic Frisby, Daylight Robbery, is he cites many examples of countries that have had little government and little taxation, and they've been fantastically successful. And one great example is Hong Kong. The British governor of Hong Kong, before the Chinese took it back, was famous for just letting them get on with it, and they became hugely successful. There's even, believe it or not, this will surprise you, in Mumbai there is a rubbish dump. It's about 1 square mile, and the Indians there, because they've been left alone by the government, who doesn't tax them and doesn't regulate them, have created a hugely successful mini economy. And now they're threatening to convert the rubbish dump into housing and offices and so on, which would totally ruin this economy that's been left alone. So, as I say, some people might not like what I'm saying, but I'm actually basing it on actual experience of what's happened. And of course, America, the greatest economy in the world, after the American War of Independence, about 200 years ago, or was it 250 years ago, was very, very libertarian. They had very little government, very little taxation, and look what it's become, a hugely successful country. Now, it's not like that now, but it's still the country of the greatest opportunities, the American dream and all that. So I actually thought Dominic Frisby's book was very well written and basing it on a lot of actual examples. Now, I'm delighted to say he's one of the guest interviewees on this very show in the next 2 or 3 months. He's agreed to come along. We haven't agreed a date and time yet, but I think you'll find him a very fascinating speaker in his own right.
To add to your point, Tony, I think Milton Friedman has said it as well. The best allocator of capital are entrepreneurs. Government are less efficient in allocating capital. That's an economist just publishing that. And so historically, there is more accountability with businesses. That's why because there's a skin in the game and there's a consequence for your action.
Yeah. we've only got to use examples of big countries in history, like Russia, the Soviet Union, that failed miserably. Too much government controlled everything. China, until they embraced free enterprise, was really struggling economically. So there's too many examples of it. Of course, any left wingers watching this show, if there are any left, won't like what I'm saying. I don't really care, because I'm basing it on what I've read and observed throughout history, and it just seems to work. You just have to have free enterprise, and the great economic engine of China's proved that, really, without a shadow of a doubt, in my book. Anyway, just to repeat what Carl said earlier, we are putting lots of links in the show notes. I do personally think it's a very interesting show. I am biased. I am hosting it, but I do think we have quite a lot of interesting things to talk about. I'd like to ask all of our many listeners to leave a review for this podcast on Apple Podcast app, as that helps us rise up the rankings, allows us to attract more quality guests for you. Please do it. Don't be shy. It makes sense. Anything else to add, lads? Sorry to call you lads, but you're much younger than me and better looking.
I think it's been a good show.
Yeah, really enjoyed it. Really enjoyed your company. You're fantastic co-presenters. So thanks very much. Look forward to the next one.
Thank you, guys.
See you soon.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.